Hey everyone, it's Minasuma here. Today is 22nd of March 2025, and today I'm gonna analyze the financial markets. Before we start, 2 seconds for the disclaimer. This week we have mixed results where over the last week we had the energy sector with a 2.95% return and the financial industry with a 2.09%. Definitely the strongest sectors among all Wall Street. The real estate has been the worst performing this week with a fall of 0.27%. Technology has slowly recovered this week, but still we have big players like Nvidia with a big fall of 3.26%, or Amazon, Tesla, Google, and Meta with falls that range between the 0.5% and 1.47%. Strong momentum for the financial companies, where companies like JP Morgan has had 3.95%, or Visa that has 1.16% up. In terms of sentiment of the market, we have the fear and greed index with extreme fear at the moment at a value of 23%. If you remember, last week we had slightly lower values, meaning that this week essentially we had a bounce. Let's gonna go directly with the markets and let's gonna begin. Let's gonna start analyzing the SP 500 versus the VIX. We can clearly observe that the VIX has been performing quite strongly over the last few weeks. We still have a high level of volatility at the moment, areas of comfort to make sure that the market increases slowly and steadily up is between the two 12, between approximately 13, 12 kind of area. Around these areas, you can see how the prices tend to be quite stable, and instead the market keeps going up, which is essentially what we want. However, at the moment, we have completely the opposite. The market has been trending down, and the VIX and the volatility has been increasing up. It's very important that we don't lose the minimum reach on the SP 500, which is the 13th of March 2025. Otherwise, the market can worsen much more than we currently have seen. We have a peak in volatility at 29.57, and hopefully, as long as those levels has not been above, we will more likely see an actual bounce continually going up rather than keep going down, essentially. One study I would like to bring today is the Dow Jones Industrial Average against the oil prices. An interesting study done by Tom McClellan showcases that there is a fundamental correlation between the oil prices offset 10 years in the future versus the current prices in the stock market, specifically about the Dow Jones Industrial Average. It means effectively that when the oil prices does a bottom and we translate that particular price 10 years after, there is high probability that the market will reach an actual bottom. And when the price start usually correcting, it anticipates a potential correction within 10 years. It's very interesting, the study, and we can analyze different periods, like for example, the 2009, which correspond to this point over here, represent specifically the correction we have in the Dow Jones during the winter of 2018. Then we have a correction during the 2022, and then we can see clearly here how the market does an actual minimum. So if we actually zoom in, we can see how the oil prices does a minimum which correspond to almost the minimum within the stock market. In his study, Doug McDillan expressed that there is a deviation between 3 to 6 months, so it isn't accurate, and it does, or the actual fall on the oil prices does not correlate to the fall on the Dow Jones Industrial Average. So the fall on the actual oil prices could be very strong and not on the Dow Jones, and instead it could be a slow kind of correction on the oil prices and then be preceding an actual big correction within the Dow Jones. What the study basically tell us is that at the moment we are in quite low levels of the oil prices when we projected in years forward. So that one correspond to the year 2015. And as we can see currently on the market, we are in a correction phase. Um, if we keep thinking, or if we actually keep looking at how the prices will perform in the future, I've got this graphic here that is essentially the oil has been shifted 10 years. So we can analyze that during the 2015 period, which is equivalent to the 2025 period, we are exactly here. So potentially, if the study ended up going into the correct direction, um, the correction will not ended up until 2026. So essentially, we will more likely have a correction within this year and probably extended until the beginning of next year. Now, moving into the market performance of the Nasdaq, the SP 500, and the Dow Jones. So we got the buy signal back in 2022. Some of it was giving in 2023 or early 2023, and since then the stock has been trading positively. We got the first signal, which was giving on the Nasdaq back in November 2024. Then we have the selling signal in December 2024 in the Dow Jones, and finally the SP 500 was given in February this year. I have had developed a system that operates on the long trade, but also on the short trade. Um, and at the moment, the system is executing a short that has been recently been closed, meaning that hopefully now we are waiting sidelines for the next market move. Moving into crypto, we have Bitcoin. Bitcoin has been one of the best performing securities in the world and probably in the history. We've got at the moment in the short term a rectangle that is currently activated. We have the 200 moving average acting as a resistance. We have these maximums or these minimums that can be connected as an actual trend line. And at the moment, Bitcoin is trading negatively. Unfortunately, the rectangle has an objective around the 70,000 area, and this week we have small bounce. In terms of the actual performance, quite bad at the moment. If we use the Fibonacci retracement, we can see that the prices hasn't even bounced back to the 38.2%, which is the minimum area we will need to bounce. And if the price is not even able to bounce towards that area, there is high risk that we're going to be visiting the previous minimums. So at the moment, Bitcoin cautious, negative aspects, the moving average is turning down, and we need to wait until future signals. Right, moving into Ethereum. Um, when comparing to Bitcoin, Ethereum hasn't performed overall that well. We have the maximums done in 2021. We have a maximum rectangle area that has been activated quite recently. This week, the price tried to bounce, but we have similar case as Bitcoin, the 200 moving area, 200 moving average trading lower, and the price at the moment at 1,984. Same as Bitcoin, we need to wait until future signals. Nothing at the moment to see here. Now moving into stocks, we have Apple. We have the 200 moving average now in reversing phase. All these points were acting as an actual support, and the price more likely is on an actual bounce this week at 218. Previous support areas were 219, so means that clearly we have here now our first resistance, and then we'll have our resistance at 250 and 259. Amazon had an ascending triangle. The objective was reach about the 191 area, and now our first resistance area is the 207, and then the 216 and 242. Moving into Google, Google is performing worse than Amazon and Apple at the moment without any clear signal. The first resistance area is the 177, and then the previous maximums as 206. Meta is trying to fight with the 200 moving average, which passes or goes in 604. Then we have the other resistance around the 673, and then the all-time highs at 740. Microsoft has had a consolidation period of about a whole year with a previous maximum in 465. Now we're currently trading at 391. The 200 moving average will act as a resistance, which is our first resistance passing by the 417. And the triangle basically has as well, or the actual wedge has been activated. It's very important that we don't lose the previous minimum on the 11th, which is about the 379. Otherwise, the situation could be very ugly for Microsoft. Personally, I wouldn't short such type of companies because of the strong momentum they have, how big they are, the overall trend in the long run. I don't discard a normal consolidation of a whole year to continue and to resume the normal upside of this type of companies, but definitely for if your strategy is based on buying on support levels, then it could be a good point, but it will be entirely dependent on what's your strategy method of investment. Then moving into Nvidia. Nvidia has had a maximum in the 153 area and a minimum in the 102. We are talking about an actual correction in less than 3 months of about 31%. We are used to this type of corrections like the one in 2024, and if we zoom out, then we have as well the one in 2021, the one in 2018, and then the big ones around the dot-com bubble and the financial crisis of 2008. At the moment, in the short time frame, we have Nvidia trading downwards on a downtrend, kind of downtrend channel, and the 200 moving average acting as a resistance in the 129 area. Then we'll have the next resistance at the 135, the 143, and then the all-time highs at 153. Tesla is the worst performers among the 7 magnificent stocks. We had all-time highs at 488 and previous minimum registered at 217. In the very short term, it seems like the price is trying to do a mini consolidation and an actual wedge with an objective to 280. The price target or the actual analysis or the actual triangle has been activated towards that direction. We have then the resistance at 315, the previous one at 367, 339, and the all-time highs at 488. Among all the 7 magnificent companies, Tesla, it seems like the one that is trading or has corrected the highest, and then we'll need to see what's the direction in the upcoming weeks. So far, or in general, I don't see many opportunities at the moment besides few examples mentioned here. The 200 moving average will need to be clearly below the price in order to change the vision of the market. And so far, we haven't seen a clear direction on an upside with a strong momentum. Still, the bears are taking control. And one important thing to note is bears don't take control of the market for actually quite a long period of time. Majority of the time is dominated by the bulls. And only we need to market timing those moments in order to profit as much as possible. That being said, I hope you like the video, you subscribe, and I see you until next time. Bye bye.